Greetings. Welcome back to our channel India Business Insights. Today, we will be looking into the company profile of Jubilant Foodworks Limited and how it is the largest food service company in the country. While some of its peers with franchises of McDonalds and Pizza Hut and KFC started roughly at the same time, Jubilant has easily outperformed the others in terms of store growth, revenue growth, profitability, and market capitalization. How did it manage to do so? You all must have ordered pizza from Domino's at some point in your life. Now, who is the company behind running such a huge franchise in the country? Jubilant is the master franchisee in India of 3 international brands: Domino's Pizza, Dunkin Donuts and Popeyes. It also operates its own homegrown brands such as Hong's Kitchen and recently acquired COFFY, which operates primarily in Turkey. While its most significant operations are in India and it has operated in neighboring countries like Sri Lanka and Bangladesh for a while, and it has operations in Georgia and Azerbaijan, it is now a prominent player in Turkey with over 700 Domino's and 97 COFFY outlets after its recent acquisition of DP Eurasia. The JFL Group now comprises of over 3,057 stores. The largest part, of course, remains the Dominos India operations with 2,029 stores as of 30 June 2024. Before we dive in deeper, let us look at how did it all begin. Shyam Bharatiya, until the founding of Jubilant Foodworks, was known as promoter of chemical companies such as VAM Organics and Insilico, which have also undergone transformation, and a relatively modest-sized oil and gas business in Inpro. Shyam Bharatiya, a lifelong vegetarian from a Marwari community, was an unlikely person to start an international pizza franchise. Even Domino's was a relatively new entrant, having started only in 1960s. It remains even today much smaller than its Yum brands owned Pizza Hut. Domino's started its international operations in 1983. It entered the Indian markets in 1995 and extended the master franchise to all India in 1998. At roughly the same time, Domino's global founders sold 93% of their stake to Bain Capital for less than $1 billion. Today, Domino's has a market cap of $15 billion, while Jubilant, its Indian franchisee, has a market cap just short of $5 billion. Domino's was well known for its 30-minute pizza delivery guarantee worldwide. This was first diluted from a free pizza to a discount in many markets. Now, while the company talks about its 30-minute delivery target, India is one of the few countries globally that offers this guarantee, of course with the usual terms and conditions. History. Let us look briefly at the history of Jubilant Foodworks. Domino's Pizza India Private Limited, as it was then known, entered into a master franchise agreement for North and West India in 1995 and opened its first store in Delhi in 1996. This was a runaway success, and people used to visit the small store from far, even though it was not really a restaurant. The country was starved of choice of fast food, with the relatively homegrown chain of Narulas also facing challenges. In 2000, the company entered into an agreement with IPEF and Indocean, pursuant to which IPEF and Indocean invested in the company. Until then, it targeted the upper middle class market. It soon started expanding to second-tier and third-tier cities. It also reduced the size of the base level, small pizza, and slashed the prices to address a much broader market. While it suffered profitability challenges initially, it expanded to reach 100 stores and become profitable by 2006. In 2010, it came out with a successful IP and was listed on Bombay Stock Exchange and National Stock Exchange of India Limited. The company's market cap has since then grown manyfold from about Rs 4,000 crore in 2010 to reach Rs 41,000 crore today. Meanwhile, the company expanded its operations to nearby Bangladesh and Sri Lanka. They remain relatively small operations and have faced challenge. However, with Sri Lanka on its path towards stability and Bangladesh, post increase in the Jubilant stake saw very rapid expansions before the recent political upheavals in Bangladesh. The company also signed up with Dunkin Donuts in 2011 and more recently with Popeyes in 2021. Industry overview. The start of Domino's in India roughly coincides with the rapid growth of the organized restaurants and fast foods industry. Prior to this, there were a few small chains like Quality for Restaurants, Nirula's had a few outlets, and there were a few small chains of Udupi and South India restaurant, including Sagar, which started in 1980s. Even today, the industry is very small as compared to the rest of the world and is poised to grow as India grows economically. Globally, the food service industry is estimated to be $2.6 trillion. India is a minuscule $51 billion and is currently the ninth largest in the world. Of course, in line with the GDP growth, it is also perhaps the fastest growing major market in the world. Over the next 10 years, QSR is likely to be the fastest growing segment in the food service industry in India, with a projected growth of 14.1% from its estimated current size of $4.8 billion. One of the factors which has aided the growth of Domino's is the rapid growth of internet and smart telephony in India. While Domino's has since the beginning had a business model focused on delivery, it was also the first food service company to have a digital platform. The entire food service industry has adopted online ordering. The total sales of food service through online ordering went up from 1.9% in 2016 to 9.7% in 2020 and crossed 10.7%. Domino's, with its primarily deliver model, has profited the most from this trend. While Domino's has seen spectacular growth in India with 2029 stores, yet Domino's is not the only business that Jubilant does. It has multiple brands, including its homegrown brands. Here is a quick view of its portfolio of brands. Brands. Domino's. Over the years, Domino's Pizza India has focused on delivering pizzas and sides. It claims to offer superior quality, exceptional customer service, and value for money offerings for diverse appetites and tastes. Jubilant's Domino's business has now a total of 2,833 outlets, of which 2,029 are in India, 707 outlets in Turkey, 50 in Sri Lanka, and rest spread over in Bangladesh and in Azerbaijan and Georgia. It now reaches 427 cities, including 33 new cities that it has entered in the last 1 year. Dunkin Donuts. Dunkin Donuts, a subsidiary of Dunkin Brands, is the world's leading baked goods and coffee chain. JFL launched the first Dunkin restaurant in Delhi in April 2012. Dunkin Donuts sells a large variety of donuts and more than a dozen coffee beverages, as well as an array of bagels, breakfast sandwiches, burgers, tea, and other baked goods. While this brand saw a slow initial growth, it currently has 36 outlets, of which 15 outlets came up in the previous 12 months. This suggests a renewed focus at expanding this brand. Hong's Kitchen. JFL entered into Chinese cuisine with a homegrown brand, Hong's Kitchen, and launched its first restaurant in Gurugram in March 2019. The brand stands for lip-smacking Chinese food customized to Indian preferences at an affordable price. It serves authentic Chinese delicacies like noodles and gravies, along with delicious starters, range, desserts, and beverages. It currently has 33 outlets, of which 18 have come up in the last 12 months. COFFY. This is a chain of coffee shops that came with its acquisition of DP Eurasia, along with a chain of roughly 700 Domino's outlets. This particular brand has grown very rapidly after its acquisition by Jubilant, and out of its 97 stores, 62 of them have come up in the last 12 months, even as it has not been expanded beyond of its home market of Turkey. Popeyes. In March 2021, JFL announced signing of an exclusive master franchise and development agreement with PLK APAC Pte Limited, subsidiary of Restaurant Brands International Inc., to own and operate Popeyes store in India, Bangladesh, Nepal, and Bhutan. Popeyes has over 49 years of history and culinary tradition with a unique New Orleans style menu. It currently has 50 outlets, out of which 33 outlets have come up in the last 12 months. The company has also launched Ekdam Biryani and Chef Boss range of sauces and pastes in 2020. They do not seem to have taken off. It is not clear if the company intends to invest and grow these brands. None of the company's communications, including the list of brands on the company website, mention these. Key reasons for growth. There are many reasons for the company's growth. It has grown faster than the globally leading brand Pizza Hut. The key reasons have been its aggressive network expansion. It focused on delivery and perfected the delivery model through its own network. With the recent emergence of multiple food delivery platforms, it has used these networks as well as recently joined the ONDC network. It has more recently started following a strategy of dominating each local market. It often splits existing stores into two. This allows faster delivery and wider coverage. This has often resulted higher system sales and profit. The company calls it its fortressing strategy, helps us serve customers better. The company used a strategy to create a virtuous cycle. New product innovations. The company has adopted to the local tastes faster. It was the first to introduce various pizzas to suit Indian tastes, such as Papi Paneer. It has also recently launched Chicken Lovers range with 4 overloaded chicken pizzas to increase the range of their menu. The company has introduced Lunch Feast. It offers a 4-course meal at ₹99. It has introduced a new pizza for cheese lovers, the Cheese Volcano. It has also launched a new range of beverages, chillers. These are also expected to drive growth, particularly during off-peak hours, and also boost margins on beverage sales. Digital strategy. It also continues to invest and focus on leveraging digital technology to drive convenience and transparency in online ordering. The company launched the Hindi version of the Domino's Pizza app to improve reach and accessibility. The company makes extensive use of data analytics and AI to drive customer engagement. It has also digitized its entire supply chain. The company has around 10.3 million app installs, has 12.1 million active users, and its loyalty program now has 24.9 million in the recent quarter ended June 2024. It has often come up with aggressive pricing strategies which remain for a while. They are not made permanent, so it has struck a good balance between growth and profitability. The company has the best integrated supply chain with 9 commissaries in India and newly opened Food Park Bangalore commissary. These commissaries purchase and process the primary raw materials. They serve as production centers for food intermediates, central kitchens, as well as warehouses. It also has 2 distribution centers and dedicated dessert facilities for both Domino's and Dunkin Donuts. The focus on supply chain ensures that the company enjoys industry-leading margins. The company enjoys industry-leading gross margins and EBITDA margins. These were at 76.2% and 19.3% respectively in the quarter ended June 2024. The company's operating margins in FY24 was 20.2%. The company announced an acquisition of 32.81% equity stake in DP Eurasia NV, which is among the largest master franchisees of Domino's Pizza. It owns exclusive master franchisee rights in Turkey, Russia, Azerbaijan, and Georgia and operates 789 stores as on June 30, 2021. The company further increased shareholding in DP Eurasia NV to 42.70% in Q4 of 2022 and then to above 48%. Subsequently, it made an offer for the remaining shares and raised its stake to 94.3% in this company. On 1st January 2021, the company made an investment of Rs 92 crores in Barbecue Nation Hospitality Limited (BNHL) for an equity stake of 10.76% reduced to 9.72% post IPO of BNHL. The company acquired 100% stake in Bangalore subsidiary in Q4 of 2022. The company acquired 30.75% stake in #Loyalty Private Limited, which operates an online food ordering platform, Thrive, for a consideration of Rs 222 million in Q3 and increased it to 35% equity stake acquisition on a fully diluted basis in Q4. Financial summary. We notice that while the revenue has grown to 2.7 times from FY15 to FY24, CAGR of 10.5%, the DP Eurasia business has been consolidated only towards the tail end of the FY24. A full consolidation would have resulted in the revenue for the years at Rs 69.3 billion. The EBITDA and PAT has grown substantially faster, as during the same period, EBITDA margin has grown from 12.2% to 20.2%, having reached a peak of 25.2% in FY22. The EBITDA margin has been constantly above 22% from FY20 to FY23, while net profit margin, which rose from 5.3% in FY15 to 7.2% in FY24, was at its highest in FY22 at 9.5%. Future plans of the company. The company aims to gain market share and focus on volume growth, drive value, and acquire new customers, innovate at the product portfolio both at the value end as well as the premium end. The company thinks that it is making good progress in these. However, it has only made middling progress in optimizing costs to expand margins. The company has in excess of 3,000 stores across geographies as well as brands. However, it still continues to have a medium-term plan to have 3,000 Domino's stores. The company sees Popeyes to grow to 250 stores in the medium term, and it sees the medium-term potential of COFFY to reach 350 stores. It is also growing the other emerging brands. The company has delivered excellent growth in the previous 10 years, and it thinks that the QSR penetration in India, including the pizza category, is extremely low. It sees the industry expanding at 14.1% CAGR and expects to grow very rapidly. While there is no management guidance to this effect, with its healthy cash flow and balance sheet, and in the past, we have seen that it is willing to make bold acquisition, we do not rule out inorganic growth. Thank you for tuning into India Business Insights. Don't forget to like, share, and subscribe to our channel for more insightful content.